1:19 p.m. June 3rd, the weekly S&P 500 index. What we are going to cover is the very narrow range that we've been in without having any great breakout. This is the top of this range right there. And every time that we got to the 20-week, the red line, the 10-week moving average here is a weekly moving average. And these markets have not broken out to the upside. And what we're saying is that we're at the wall of price exhaustion. There's been a lot of opportunity for this index to be able to break out and go higher. I'm saying that there's a big size pullback coming and that we are overbought. This is the tighter range. This is where they bought these dips right here on these weekly moving averages. And basically, we started with yesterday with the down move, and we can clearly note today that 10-week moving average is at 2106. And we tested it, actually went below it at one point. The 20-week moving average is at 2088.51 on the S&P right here. S&P ended up on the day 4.47. That was it. You can just simply tell here that there is a lack of buyers and not any enthusiasm as far as the 10 sectors in the S&P breaking out. One of the things that we can show for sure about the S&P is that there are a lot of stocks that are in the S&P, and they have yet to be individually breaking the leadership stocks out. On this chart behind me, this is called a daily chart of the S&P. It's not a weekly, this is the daily. And I will just show on the top end of what's going on here right now. So this is how we started out the year. And we rallied up nicely, we pulled back, we've gone narrow range. We made this blow off top right here on this daily chart at an all-time high, and that was exactly 2134. That's where the all-time high was, right up in here. And when that resistance level was there with the perfect opportunity to break out, I'm so sorry to say it did not. And what was a 5-day pattern up here, the S&P did not perform. It did not make another series of higher highs. And this was that daily bar that you would look for at a major 1, 2, 3, 4. It's a 5-day narrow range rectangular consolidation with a breakdown daily bar and then a counter trend. And so the 10-day simple moving average is 2117, and let's just go ahead and make this very clear to everybody. That 10-day moving average on this daily chart is trying to descend in value, and you can see right over here where this trend line is, and it goes back to part of this 5-day consolidation right here is exactly where that resistance level is. So what I am saying right now, in this month of June, we will have a good sized pullback. And what we're looking for is at least a 10% pullback. We haven't had one of those since 2011. And we're long overdue. We're 7 years into this bull run. One of the common denominators that we have to show you is the following. We have covered a special here called the 2016 super bubble that is going to happen. We're already halfway through 2015, and that these markets are trading in that type of range. We said between 2015 and 16 we are going to have one of the bigger drops in these exchanges, and the volatility is going to continue to increase. We encourage you to visit our bubble because it is. And we have a couple other videos that we put out. This is just a follow up one closing the last trading day of May right here. Having said that, now, it's very clear that this consolidation on a daily has that breakdown testing the 20-day, and this blue line, naturally so, is a 40-day simple moving average, and they're all contracting right here together. And yes, we came down, we nicked and touched that 50-day moving average, and we popped back up here in the low volume volatility. There was a $400 million sell program today across the board going into the closing bell. So we're going to conclude that this S&P is coming down. We're going to conclude that the 50-day simple moving average has been that wall of support in the very short term. But guess what? When you bounce off a 50-day moving average, what you want to see is a breakout through these resistance levels going through here all the way up to this trend line, which is right over here where my pointer is, right over here. And we couldn't go through there, unlike a lot of other times. This was a counter trend. This is always a confirmation that we're starting a reversal, as it was. And it's just volatility. But when you really take a look at it, we've got more bigger sell volume on these candles than we do on the breakout side of testing that 10-day moving average, and it couldn't get above it. And I'm just going to say one thing. Another thing too is that make sure you keep a lot of stops. We're going to be getting net short. This S&P is coming down, and that's going to be the end of the story. Today's timestamp is 6/3/2013.